Hello traders and welcome to the show at Quality FX Trading. In today's video, I'm going to show you how to understand actually the liquidity concept and fair value gap, which are the very basic elements for our strategy. So it's like mandatory for you to first understand this concept before I can go ahead and explain how you can use our strategy, which I'm going to discuss it very soon in our next videos. Before that, I need to make some videos so you can grab the idea that how we are going to apply these elements, into uh, the price action, and then we can get benefit out of that by using our strategy, how to get in and get out with profit and to reduce your loss. So managing trade and also having a good risk management is also very crucial for you to get maximum benefit out of this strategy. So now I want to, for those of you who don't have any idea what is liquidity, what is fair value gap, please go back and watch our very basic videos about this concept. This is little bit kind of intermediate level, so you need to understand very basic idea about this concept before coming and getting more benefit out of this concept. So here in the top, of course, this week is kind of liquidity grab, which is taking the buy side liquidity above the previous buy side liquidity pool. Before I continue this session, let me tell you exactly what are these horizontal lines. So those green lines are referred to valid swing high, which we discussed in the last session about how to determine the valid swing high and swing low. So the two horizontal line is shown in this daily chart for gold. We have two swing high, and then recently and the end of June, actually we got this recent valid swing low, which is highlighted with red horizontal line. So we want to we want to somehow merge this concept together, and you can see there are some fair value gaps here, which I'm sure you know that this candle here, let me just get some like rectangle to show you that here we have a fair value gap, as you can see. Okay, and this fair value gap, which is here, this is a fair value gap. Okay, and this fair value gap was not retested, and actually we call this kind of fair value gaps breakaway gap as per ICT smart money concept. So once again I need to raise a point here about ICT, appreciating ICT a lot. I know many students of ICT are here in YouTube making videos, including quality FX trading. Of course, we learn a lot from ICT and appreciate to Michael. Credit goes to him. But the thing is that this strategy is using concepts from ICT, but not necessarily we are following exactly the strategies of ICT, and you will know about this, but definitely the concepts are similar, and we got the ideas, the general ideas, overall ideas from ICT. But the swing high and swing low validity is very unique to quality FX trading somehow, and uh, here we can see this fair value gap, which was not retested. It means there is no candle that goes back to that and retest that. So usually, okay, when we have a swing low, for example, here, if I push this up a little bit, and you see here, we have a swing low. Let me just grab this one and put it for you here, which we have a fair value gap. Okay, so I just want to show you that how this fair value gap, which is a bullish fair value gap. Okay, so I'm just putting this one inside. So here you can see this bullish fair value gap is formed here. Okay, then inside the fair value gap you can see we have three candle formation of valid swing low. The middle one closing below the two other, and the third one is closing above in term of candle's body. Okay, not the wick. This is very important. So when we have such a setup, definitely we are going to grab the liquidity. So let me just remove these two lines. So, and then I want to bring a box here for you to show you where is the buy side liquidity. Okay, let me just show with the blue color the liquidity which we have here above this candle. Okay, here actually. So you can see after formation of this swing low inside the fair value gap, and you can see when the price is coming back, the body of the candle, which is forming a swing low, is not closing below the fair value gap at all. So the body of the candle is always respecting the fair value gap whenever we have a valid setup. So this is very important. It's like a confluence between the fair value gap and swing low, and this is going to be very crucial when we are going to step up and give you the idea that how our strategy is going to work. So please pay attention to this note that respecting the fair value gap together as a confluence with formation of valid swing low is gonna be a very crucial formation that can give you like double, triple confirmation, which you can risk on it. And considering your risk management, you can get a good reward out of that. Now, after knowing that how you can merge the fair value gap and swing low, now and consider this is a daily chart, and you can apply this in all time frames, and we are coming to that. And there is something that you can consider, which we are going to discuss in the next videos, and that is the time price theory, which is very important because you will see that how this price moves exactly in the time of the day that it is supposed to have the actual move, And also you have to understand that how it's the price action is fractal. When we are saying the price action is fractal, it means that it's moving based on previous higher time frame. This is a very good topic to discuss, and we are going to show you this concept in the next videos, that how the time frame is important. And when you have a daily price swing, then you can go to the H1 and to the 5-minute chart, and you see how the price is moving to the upside based on the idea that we are getting from that higher time frame formation. And now here you can see the daily chart. So the daily here, the previous high, is called liquidity, and you can see after formation and coming back as a pullback inside the fair value gap again, but is not going below that valid swing low which was formed earlier. Okay, this is very important. It can go and little bit manipulate the low, but it cannot close below that valid swing low. And usually you can put the stop loss below that swing low with few pips lower in case it wants to go and manipulate, because sometimes based on the algorithm of price action, price is going and just manipulating the swing low but is not breaking in terms of candle's body. So the price is going back, retesting that fair value gap, and you can see how it's pushing to the upside and breaking this high. Okay, breaking this high and taking the buy side liquidity which is resting above these candles wick. Okay, and then here again we have another nice example, but this time let me just bring this fair value gap up now. Okay, so now we have this box here. I'm sure you know, I trust you know the fair value gap. If you don't know, please go back and watch the videos we have in this channel about fair value gap. So here the bullish FVG again forming, and you can see price is coming back to this fair value gap, and then again we have the buy side liquidity above, which after coming back and respecting, see, the body is not closing below the box which is the fair value gap box. Okay, so the body is closing above and then pushing to the upside. Here we don't have any there is no valid swing low, but we have the fair value gap, and for sure by going back to the lower time frames you may find swing low there. So then here you can find the buy setup in the lower time frame. That's why I'm saying the price action is fractal. It means when you can see a daily fair value gap bullish and you are looking for this buy side liquidity above this high, definitely you can go to the lower time frame and find a valid swing low to take the price above this high and take the liquidity as your profit target. And by doing that, there is another great advantage which you can get, and which is going to be having less risk. Okay, so if you're going to rely on the daily setup, definitely your risk is going to be big. But if you move back to the lower time frame like H1 or especially 5-minute chart and even 1-minute chart, definitely based on the idea you are getting from the higher time frame, definitely you can find a proper risk to reward ratio, and so on. So I think that is enough for today's lecture, and I hope you got the idea that how we want to merge this concept of swing high low, fair value gap, and liquidity as target profit to continue with this discussion. So I'll talk to you soon in the next video, which we are going to discuss about other elements forming this strategy, and then finally we are going to talk about the strategy itself. And please don't forget to like our videos, because these things are all free, and we just want to know if you are liking these videos. Please don't forget to leave a comment, because I'm going to read all the comments, and if you have any question, definitely I'm going to answer. And also, if you are going to motivate us, then we are going to put live videos, live trading for you as well. And I'm going to also release some videos about like analysis, weekly, daily chart for you based on the weekly forecast, daily forecast, daily analysis. So we, after knowing this strategy, we can work it out together and get a good result out of that. Talk to you soon. Take care. Bye bye.